access. We need access to the oil and to other things in their country that allow us to rebuild their country.
It's 5 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Acting President of Venezuela, Delcy Rodríguez, urges the U.S. to work on a cooperation agenda. President Trump says, sure, but, quote, we're in charge. Oil swinging between gains and losses as traders weigh geopolitical risks and as OPEC confirms it's keeping supply steady. All that while stocks, bonds, gold and the dollar all rally at the start of the first full trading week of the year. So let's take a look at these markets now, because we had small moves for the major indices on Friday, but the Philly Stocks Index was up 4%. And that seems to be setting the tone a little bit today into the Asian session, where we saw a major rally, and now into futures. Obviously, the geopolitical situation is going to play into the tone today. Ed Yardeni calls it an unsettling development in Venezuela, but says sometimes geopolitical crises can create buying opportunities for stock investors, so that might be a little bit more of a positive tone on what's going on. Let's take a look at the bond universe, because we're also seeing just a very small rally in bonds. The steepening trade still on. As you can see, a basis point or so for the 2-year, 2 basis points there for the 10-year yield. It got up almost to 420 just on Friday. And then let's take a look at metals, because they're still rallying. It's the continuation of the trade that we had before the holidays. Brent crude is obviously rallying for different reasons, but it is swinging between gains and losses generally. Gold up 2.4% and copper almost 3% higher. So many questions swirling over Venezuela and what's going to happen. But we also have a raft of economic data this week. Traders will be so relieved to get some fresh and perhaps more trustworthy jobs data on Friday as well. Now let's get to some individual movers, because there are plenty of those this Monday morning. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with a check on these U.S. oil majors. We are seeing some gains right out of the gate in the U.S. pre-market. Chevron up 8.4%. They are the last U.S. oil major to have a presence in Venezuela, and the prospect of perhaps tapping these massive reserves in Venezuela is leading to a buoyant oil market this morning. ConocoPhillips up nearly 8% and ExxonMobil up over 4%. The other thing to keep an eye on today is this continued excitement around AI. We started the year very strong in Asia yet again, and we're also seeing the likes of ASML, the European chip maker, up 2.4%, and TSMC doing very well, an upgrade from Goldman Sachs. That share is rising 3.2% in pre-market trade. Another theme of today is defense stocks are on a front foot. These geopolitical tensions is one of the main reasons why we are seeing European stocks trade so strongly this morning. Many European stocks trading in the green. Rheinmetall, the clear winner, up nearly 7%, dragging the Euro Stoxx 600 higher with it today. Bonnie.
Valerie, thank you so much. Valerie Teitel there in London. And coming up in this hour, we're going to be speaking with Celestino Amore of Canaima Capital, an investor in Venezuelan debt. Later this hour, we'll also look at the dollar with Rabobank's Jane Foley. But first, back to the top story, and President Trump says he will cooperate with Venezuela, but the U.S. must be in charge in rebuilding the nation.
We're going to run everything. We're going to run it, fix it. We'll have elections at the right time. But the main thing you have to fix is a broken country.
Joining us now with the latest is Bloomberg's Suzanne Lynch. Suzanne, what can investors expect in terms of clarity when it comes to what the president said about running Venezuela?
Well, already, Vonnie, we're seeing mixed messages coming from the White House. Earlier on Sunday, we heard the Secretary of State, Marco Rubio, suggesting something quite different than Donald Trump, not as strong in a statement about America actually running the country. But as we heard last night in those comments from Donald Trump coming back from Florida to Washington, he was quite clear in his views. Now, the key question is where the new president, if you like, the new Vice President of Venezuela stands on this. Rodriguez, we saw a much more conciliatory message from her late on Sunday night, saying she was prepared to, work with the US, invite the US in, if you like. Now, Donald Trump did say on Sunday evening that he had not yet spoken to Mr. Rodriguez. So let's see how that develops as we go into the beginning of this week.
TD Security is saying today that Venezuela has the potential to completely transform the year on the policy and political fronts. What can we expect out of Congress and just the domestic response to the president's agenda here?
Well, look, we are heading into a year where we're going to have midterm elections towards the end of the year. There is a lot of analysis around about how the American public are responding to this. So far, we've seen the different parties come out quite predictably on this. We've heard complaints from Democrats in Congress, senior Democrats in Congress, that they weren't consulted on this. But by and large, the US president does seem to have the support of most of his party for this action in Venezuela. So it's very hard to see, with the way the numbers are in Congress, how much power Democrats have to try and force the president's hand on this issue. But let's see if this succeeds in changing the narrative a bit for Donald Trump away from issues like cost of living. That's been something that has been hanging over the president's presidency over the last few months in particular. This has definitely shifted the focus. All the headlines today are about one thing, Vonnie, and that is this new intervention in Venezuela, which is really the most dramatic foreign policy intervention we've seen by Donald Trump.
Absolutely, and the UN Security Council is going to hold an emergency session after the capture of President Maduro. But what about the rest of the international response, Suzanne? Can we summarise it in one reaction, or were there a plethora?
There was. Over in Europe, we had a kind of mixed, a cautious reaction, I would say, from European leaders. They do not want to criticise the United States at this moment because we're also at a key juncture when it comes to Ukraine and Russia. And there's a key meeting in Paris on Tuesday about Ukraine and Russia. And the Europeans want the US involved in some way, particularly when it comes to security guarantees. But we did see some EU leaders come out stronger, more critical. For example, the Spanish Prime Minister, Pedro Sanchez. Obviously, Spain has historic links with South America. But look, the big concern around the rest of the world is what might happen next. Last night, Sunday night, we heard from very strong rhetoric from Donald Trump, doubling down on his comments to The Atlantic magazine that this perhaps is a harbinger of more activity, be it in Cuba, Colombia, and also Greenland. That is a big concern. The Danish Prime Minister, Mette Frederiksen, issued a statement on Sunday night saying that the US should not think it can annex Greenland, which is part of the Kingdom of Denmark. And I can tell you, Vonnie, there are a lot of concerns now about Donald Trump's comments as regards Greenland over the last 24 hours or so. The Danish Prime Minister pointed out, rightly, Greenland is a member of NATO, and pointed out that the US already has a lot of access in Greenland. But I think that's one of the big concerns now for the rest of the international community.
Suzanne, thank you so much. Suzanne Lynch there for us. Much appreciated. Oil, meanwhile, pretty unchanged right now. It has been swinging between gains and losses on the latest development and, of course, as OPEC confirms its plans to keep its supply steady. Joining us now is Bloomberg's Will Kennedy. Will, to Venezuela first, we have to ask you, I mean, the low-quality oil that's produced by Venezuela, is used for asphalt and things like that. How much does the US really want to get in there, spend tens of billions of dollars and extract some of this oil for its own purposes?
I think there would be some attraction to greater US involvement in the Venezuelan oil industry, which historically is a place that it's been, and in the case of Chevron, a place that it continues to be. Yes, it's heavy oil, but that oil does work very well in a lot of large US oil refineries on the Gulf Coast, and of course complements the very lighter sweet oil, which is mostly produced from US shale fields. So it does have a role to play in the US oil system. I think for the likes of Chevron, Conoco, Exxon, as they evaluate opportunities in Venezuela, what's going to be really important is the legal certainty of going back. All those companies, were expropriated to a greater or lesser extent by the Chavez and Maduro regimes. They lost assets. In the cases of Conoco and Exxon, they sued the regime looking to get their money back. So it's really going to be about whether whatever emerges in Venezuela, whether that new political leadership can offer certainty that this is a place where these companies can do business for the long term, because reviving the Venezuelan oil industry, and the reserves are there, they're the biggest reserves in the world, but reviving that industry will take many billions of dollars and many years.
Yeah, JP Morgan's commodities team actually came out with an estimate saying that production could see a 250,000 barrel uplift from its 2025 average in the short term. It doesn't seem like a lot, but I guess if you're a Chevron or a ConocoPhillips, the idea that that would rise to maybe 1.3, 1.4 million barrels within 2 years could be attractive. Would they have to compete with other countries, or would this purely be up to them if they want to invest, do you think, Will?
Well, it's very clear from the comments that we've heard from Donald Trump and other people in the US administration that they see this as an opportunity for the American oil industry, that they're very keen that US oil companies have a greater involvement in the Venezuela oil industry. The vast majority of Venezuela's oil reserves remain in the hands of PDVSA, the state oil company. There are other players, some European producers, including Spain's Repsol, still have a business in Venezuela, and they've got Russian and Chinese players too. Now, what their future is in Venezuela is interesting, but there's so much opportunity to produce in Venezuela that probably room can be found for everyone. But it's clear, just to recap, I think, from comments we've heard from the Trump administration, that they would want US oil companies to lead in any revival and investment. And in the shorter term, yes, those gains may be modest, but over years, the gains could be very great. The obstacle is not geology. The obstacle is investment and having the conditions that make that investment a risk worth taking.
Yeah, and of course these companies all think in decades, not months or years, right? Will, thank you so much for all of the context. That is Will Kennedy there. Now to other top stories trending on the terminal this morning. Hedge fund Tribeca is considering investment opportunities in Venezuela after the United States' capture of Nicolas Maduro, describing it as, quote, a massive gold rush. The firm is sending a team of investors to Caracas this week to meet with would-be partners and inspect potential assets. Tribeca Global Natural Resources Feeder Fund has generated estimated returns of 127% in the last year. Denmark's Prime Minister urging President Trump to stop threatening to take control of Greenland. Mette Frederiksen's comments came in response to Trump's renewed assertion on Sunday that the U.S. needs Greenland for defense purposes. Frederiksen said in a statement, the U.S. has no right to annex any of the 3 countries of the Kingdom of Denmark. And a panel of economic luminaries said the long-run risk posed by mounting federal debt represents a paramount problem facing the U.S. Speaking at the American Economic Association's annual meeting, former Treasury Secretary and Fed Chair Janet Yellen said she was hopeful a crisis could spur Congress to strike a bipartisan deal over budget reforms. The Congressional Budget Office has projected the federal deficit this year will be $1.9 trillion. Coming up, investors upping their bets on Venezuelan bonds after the capture of Nicolas Maduro. We'll speak to one Celestino Amore of Canaima Capital. That's next. This is Bloomberg. This is Bloomberg Brief. I'm Vonnie Quinn in New York. A potential regime change in Caracas setting up Venezuela bonds for more gains. Hedge fund Tribeca is calling it a, quote, massive gold rush. Joining us now is another investor, Celestino Amore, co-founder of Canaima Capital. And Canaima has long been investing in Venezuelan debt. So you've been waiting for this moment, I'm sure, Celestino. Can you tell us how long you've been investing in Venezuelan debt and a rundown maybe of the type of purchases that you've been making?
Thank you, Vonnie, and thank you for having me here today, and good morning to you and to all the spectators here. Yes, we launched Canaima Global Opportunity Fund in December 2020, and it has been a long conviction trade for us. We been investing when they were sanctioned on the bonds, and the second in trading on the Venezuelan bonds. So it was only European investors could buy this. In fact, there was this opportunity for European investors to buy at the time. We bought as low as the single digit, the bonds, but it's been a long ride. I'll tell you, it's not been for investment for faint-hearted, and it's been a while been waiting for this. So this is a great opportunity for investors now. There's much clearer path that we have now. There's no secondary sanction on the secondary trading on the bonds. So very excited for what's happened last weekend, and have been speaking with all our investors. They're very excited as well.
So JP Morgan anticipating that we'll see gains today and maybe in the next few days. How are you positioning yourself now, given the events of the weekend? Are you waiting?
Yeah, okay, so we've been buying all the way for the last few years, and then 2023 there's been a removal of sanction on secondary market of trading, and the bonds already been going rallying, and since last year we've been, because of this pressure, maximum pressure of the US administration on Venezuela, we've seen the bonds rallying with the expectation that something would happen to Maduro, which did this weekend, and the removal of Maduro is the first step, we think, towards the negotiation with the U.S. administration. With Maduro, it was not possible to have any negotiation. Was not a counterparty, reliable counterparty that the U.S. administration considers to have on the other side. With removal of Maduro, there is opening up a way for the U.S. company, as President Trump mentioned this weekend, to come into the country and create the cash flow for a potential restructuring. That's what the market was expecting. That's what the market was pricing already.
Can you envision a debt restructuring happening under Delcy Rodríguez? It wouldn't exactly be a regime change, and that's what investors typically say needs to be done.
Yeah. Definitely was not possible with Maduro. There was no chance that with Maduro could have happened any type of restructuring. With Delcy, we don't know yet. That's why when you asked before if we're increasing our position now, I said we're happy with our position now. We are not increasing yet, but we are monitoring very, very closely these negotiations. We want to see how this pragmatic political negotiation with Delcy and the U.S. administration, they are going to go ahead. It seems that the U.S. are really they're already willing to move ahead. They're giving a lot of concession. And on the other side, from yesterday discussion that we heard from the newly appointed president, Delcy Rodríguez, we heard that there is willingness on the other side. If this is going to happen, there will be clearly a path for a restructuring as early as this year, we think.
Creditor government engagement is very key, and obviously a $60 billion restructuring is quite complex. Do you anticipate that you're going to be able to have, a bondholder committee? What does that look like? And can you engage with a Delcy Rodríguez government if that's what we get?
Yeah. All these questions that you're just mentioning, Vernie, they are up in the air. Nobody knows, and we are watching very, very closely. But the reality of the fact and what was our investment hypothesis once we launched the fund in 2020, end of 2020, is that Venezuela has always been a sphere of influence of the United States. And the bet here is that, the big bet here is that Venezuela will go back in the Western financial system. If this is going to happen, then the sanctions are going to be removed. The investment bank, they're going to flood in Venezuela. There are going to be tons of restructuring, not only on the debt, but also on the infrastructure. The whole economy needs to be rebuilt. So there will be tons of opportunity for investors if this is going to happen.
Celestino, how concerned are you that we might get a brief transition government and a new government taking over would actually repudiate the debt or make investors take major haircuts?
This is something that we analyzed with our legal team, looking in the last few years. Repudiation is not really possible because it's not really a new country like USSR or Sudan, North Sudan, South Sudan. This is the same country as before, so there are no precedent for repudiation, and we think this legal argument will not hold in any way, shape, or form, especially in the U.S. courts. So the key here is in terms of haircut, how big is going to be the haircut, if and when. Now, we're talking about a reconstruction, which in the analysts estimate an investment that we're talking that is going to happen in the next 5-10 years is between $500 billion to $1 trillion. And the economy and the GDP of Venezuela can go from 100 billion, which is now, to 300-400 billion. And having a debt of under 150, 160 billion, which is going to be less than half of net 50% of debt to GDP.
Yes.
I don't think it's going to be a big deal. So it's going to be, we don't expect huge haircut, and is a country, and this type of country doesn't need a big haircut. What they need maybe is the extension of the debt, some possibility to repay with warrants, oil warrants, or shares in the privatization of companies. They're going to be a lot of instruments that can be given to investors to recover for the time spent and repay the creditors.
So, Celestino, we did see JP Morgan adding back Venezuela middle to the end of last year after it looked like there might be some kind of action down there. I'm curious as to what you're seeing in terms of other banks and investment firms now jumping in on the action, perhaps even placing people into Venezuela.
Yeah, there will be a lot of talk of people going there, trying to see what are the opportunity investment. We have been called all this weekend from our investors and asked what can we do, how can we invest directly in Venezuela. At the moment, there are still sanctions in place. It's not easy to invest directly, but obviously plays clearly the real estate, which is not sanctioned. This agricultural sector is not sanctioned. There is a leisure sector is not sanctioned, and also some part of the mining sector is not sanctioned. Coal, for instance, is not sanctioned in Venezuela. So we're analyzing all these potential sectors that are not sanctioned, and for our investors, and we see. And we have a short list, a pipeline of potential targets that we're analyzing.
Just briefly, Celestino, I mean, you have a base case scenario. You say the most probable scenario is one of controlled confrontation and so on. But I'm curious, are you looking at other countries now in light of what you think is the Trump administration acting on the Monroe Doctrine, and you think this could continue?
Yeah, I mean, the Monroe Doctrine, as fairly announced, has been first applied in Venezuela in 1900 and has been reaffirmed this weekend in Venezuela. Clearly, the next target, and when they get another opportunity, could be Cuba. No, there's still Cuba debt, and the London Club has been a London hub. The city of London has been a hub of trading on Cuban debt for many years. Since when was the U.S. investors were banned to trade and invest in the Cuban debt?
Yes.
So this is something that we are monitoring very closely, and we already have some position, but definitely something that we've been discussing. It could be a potential next target.
Fascinating. Celestino, you have to promise to come back very soon when we know more. Celestino Amore, co-founder of Canaima Capital, thank you. Time now for your front page news, and as you can imagine, one story headlining most major news outlets. On the New York Times, President Trump reasserting the U.S. is in charge of Venezuela, while Secretary of State Marco Rubio talks about putting pressure on the country's acting leadership. The Washington Post highlighting how Venezuelans are coming to terms with what might come next, with many expressing confusion, dread and uncertainty about the future. And the Financial Times leading with a story about the nation's acting president, Delcy Rodríguez, who also has Trump's nod to lead Venezuela. All right, let's take a look at how markets are faring today, starting with futures, which are pointed higher. Definitely some optimism bleeding out of the Asia trade. And of course, it is the first trading week where we get a raft of fresh data. The Venezuela story doesn't seem to be impacting stocks at the moment, or perhaps investors see it as an opportunity. In terms of bonds, we're seeing yields lower by about a basis point right now, 346, 416.91 on the 10-year. And metals continue to rally. Coming up, we're going to move to FX. Jane Foley of Rabobank joins. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. Acting President of Venezuela, Delcy Rodríguez, urges the U.S. to work on a cooperation agenda. President Trump says, sure, but, quote, we're in charge. Oil fluctuating as traders weigh geopolitical risks and as OPEC confirms it's keeping supply steady. All of that while right now, stocks, bonds, gold and the dollar all rallying at the start of the first full trading week of the year. So let's take a look at how we are standing right now. The S&P 500 was up 0.2% Friday. Futures are pointing to another gain at the open. Now, the Nasdaq 100 was down 0.2% Friday, but the Philly Semiconductor Index was up 4%. So you can see the Nasdaq 100 seeing this burst of optimism that we saw in the Asia session overnight as well on AI. Once again, it fueled those gains. It may fuel gains into today. Russell 2000 futures, well, they flipped into negative territory. Let's take a look at bonds, because we did see some buying with the 2-year yield down just a basis point, the 10-year yield, though, down more than 2 basis points. So we are getting a little bit of steepening. And in terms of metals, that story just continues. We're off our gold record, but not that far off it. We're still above $4,400 a troy ounce. And then we have copper and gold and Brent also moving today. Now let's get to some individual stocks to watch. Over to London and Valerie Teitel.
Good morning, Ivani. Let's start with a check on the oil industry. We are seeing oil majors on a front foot this morning. The big winner is Chevron, up nearly 8%. ConocoPhillips not far behind, up 7.5%. And ExxonMobil up just shy of 4%. This comes as the promise of perhaps tapping those large reserves in Venezuela for these U.S. oil majors might come to fruition, even though it will deal with a lot of capex spending, a lot of investment to get that oil out of the ground. We are nonetheless positive across the oil sphere this morning. Secondly, we have to mention the AI trade again storming out of the gates this Monday morning. It led to record highs in the Asia session. Samsung jumping over 8%. We're also seeing the likes of ASML up over 2% in pre-market trade, and TSMC seeing gains of over 3% as well. It has been a great year so far for the chip makers, and tech will be a big focus this week, Vani, as those tech leaders convene in Las Vegas for the CES show. We are expected to hear from the NVIDIA CEO and the AMD CEO later in the day. Lastly, geopolitical tensions mean defense stocks are on a front foot today. It did lift the European index. We are seeing shares of Rheinmetall up over 7%. Many of the gainers in Europe had to do with the European defense trade, again, signaling these geopolitical tensions mean that these defense industries might continue to stay buoyant this year.
Amazing. Valerie, thank you so much. That's Valerie Teitel there in London. The dollar index rising after the U.S. has moved to oust Venezuelan President Nicolas Maduro. A raft of data this week, of course, will also shape the dollar's trajectory. Let's bring in Jane Foley, Rabobank head of FX strategy. Jane, we have to start with Venezuela. What questions are FX traders asking today regarding how Venezuela might change the trajectory for various currencies?
Well, to be honest, I think this is all about geopolitical risk. I think we know that Venezuela is so small in terms of the global economy to have a really big economic impact. So it is about what this means for instance, defense spending. What does it mean for other geopolitical risks? What does it mean for China's attitude towards Taiwan, US attitude towards Greenland, etc.? So there's a huge amount of loose ends, really, in terms of geopoliticals out there. But, I think this is also a story of positioning, because we have got the yen, we have got the dollar as the best performers today. And that might surprise a few people, because last year, of course, these were poor performers. Indeed, the market questioning whether or not both of these currencies could have lost their safe haven status. But we must all see this through the prism, if you like, of positioning. And of course, at the start of last year, the market had been very long US dollars. Right now, of course, it isn't after last year's big fall. So I think there's every reason for the dollar to gain a little bit on the back of geopolitical risk, or a little bit of safe haven flow. And I think that's exactly what it's done today.
Yeah, I mean, the index is, quote unquote, only up about 0.25%. How much more room is there for it to rally on geopolitical risks, given, as you say, positioning? We were down nearly 10% on that index last year.
Yeah, and I think this is what it was all about. Certainly, in my view, the falls that we saw in the dollar. And don't forget that these were very much concentrated in the first part of the year. The dollar actually performed reasonably well in the second half. I think at the end of the year, something like the third best performing G10 currency in H2 last year, although it was the worst performer in the year as a whole, because the market was or is no longer long dollars. I really see the dollar on this weakening trajectory through the year. The market consensus certainly sees that the dollar is falling further this year. We think it's going to be more likely to be choppy trading as the market walks works its way through all of the individual economic and geopolitical risks as they're thrown at the markets during the course of the year. So a little bit of upside, yes, but I think by the end of the week, the market is going to be concentrating, as you mentioned, on the economic story, what's going on in the US. We'll have a lot of jobs data out from the US this week, ending, of course, with the payrolls report. And that, I think, is going to focus the market's attention back on the Fed.
Yeah, absolutely, Jane. So what do we need to see Friday in order to calm everyone's nerves?
Well, what we have already is a job market that we know is going through a cyclical downturn, but it really isn't all that bad in terms of the US growth. The story there, isn't too bad. And I think what we need to see, what we may see, may not see, is, a little bit more confirmation about the relative fragility of the jobs market. How weak is this, or is it not? Is inflation risk still going to be a theme for 2026, or are they not? So we want a little bit more clarity, and hopefully by the end of the week, these jobs reports will give rise to a little bit more positioning, perhaps by some of the Fed rhetoric as well going into the new year. So the market will perhaps get a little bit of a better feel about the trajectory of Fed interest rate cuts this year.
Well, and of course, there's also domestic policy, which is obviously going to impact, lots of things, inflationary and disinflationary, everything from the president deciding that certain tariffs can be, postponed, to the president, perhaps wanting to send out checks to Americans that will be feeling the impact of some of the ACA subsidies, for example, going away. So there's a lot to consider, and it's not just the labour market. There's inflation to consider as well, Jane. What's your outlook for how inflation develops in the first and second quarter?
Well, again, as you mentioned, we've seen some rolling back of tariff. We've seen news around that over the course of the end of the year, rolling back of or a delay, I think a 1 year delay on tariffs on upholstery, for instance, and a cutting of the tariffs on Italian pasta. And of course, in November, lots of agricultural goods. Now, this is, of course, Trump being sensitive to the impact of the cost of living on US voters, because, of course, we are faced with midterm elections this year, and that is going to be a big theme. So to how consumers feel this cost of living, how much inflation they see, is really important to the president. So in the Fed's view, of course, inflation could now be just transitional. We could see through it by the end of the year, but we just don't know. It's still a risk. It's still something for the market to absorb and watch for during the course of the next few months in particular. And it could, of course, still play out in how the Fed decides to position its policy.
Jane, in terms of other currencies, we have the yen very close to 157 once again. We have the yuan, both offshore and onshore, below 7 now. Do you see potential out there for ructions in FX markets at all?
Maybe not ructions, but certainly we will have certain volatility. Now, it's quite interesting. The yen is performing relatively well today, although it, of course, it's very much on the back foot during the course of last year. And that does coordinate with a hawkish speech that we've had from Banker Governor Ueda today. Now, that, of course, puts the late January BOJ meeting in focus, even though, of course, they only just hiked interest rates in December. How hawkish does the Bank of Japan have to be? And actually, when you consider some of the speculation going into the end of next year, that various different G10 central banks could be hiking by the end of 2026, that gives you perhaps another sort of lean on how the Bank of Japan might play this, because if other central banks are hiking not just them by the end of the year, do they have to hike even more to keep the yen from falling further? That's another question that hopefully we'll get to the bottom of in the months ahead.
Yep, so many questions outstanding. Jane, thank you so much for joining us this morning. Jane Foley there of Rabobank. Now to other top stories trending on the terminal this morning. Ruben Amore has been sacked as Manchester United head coach after hitting out at the club's owners yesterday. The club announced his departure on its website. Ruben was appointed in November of 2024 and led the team to a UEFA Europa League final in Bilbao in May. Former midfielder and current under-18s coach Darren Fletcher is expected to take charge on an interim basis. An investor group led by Apollo Global Management has agreed to invest more than $1 billion in OXO to support the building products company's acquisition strategy. The investment will be in convertible preferred stock with an initial conversion price into common stock of $23.25 per share. OXO must use it to acquire at least one company by mid-July. Denmark's Prime Minister urged President Trump to stop threatening to take control of Greenland. Mette Frederiksen's comments came in response to Trump's renewed assertion on Sunday that the U.S. needs Greenland for defense purposes. Frederiksen said in a statement, the U.S. has no right to annex any of the 3 countries of the Kingdom of Denmark. Coming up, oil stocks jumping in pre-market trading as President Trump says the U.S. must run Venezuela. More on that next. This is Bloomberg.
We need total access. We need access to the oil and to other things in their country that allow us to rebuild their country.
Over the weekend, the U.S. attacked Venezuela to oust President Maduro. The interim president, Delcy Rodríguez, is now hoping for cooperation after her initial outrage over the strike. Joining us now from Santiago, Chile, is Bloomberg's Patricia Garrett. So, Patricia, so much of the administration's focus is on Venezuela's oil. Where does the industry stand?
Yeah, Bonnie, good morning. It's a situation on the ground that's pretty complicated after weeks of U.S. pressure, months of U.S. pressure, really. We've had sanctions since way back in 2019, and then more recently, the U.S. imposed this partial blockade on oil shipments. The oil industry on the ground right now in Venezuela, of course, is a shell of its former self, but it also is even more deteriorated lately because of this blockade. So you have huge amount of oil accumulated in storage, both onshore and floating, millions and millions of barrels. The U.S., if the Trump administration wants to follow through on what President Trump said in terms of U.S. oil companies going in terms of recuperating the industry, some steps are going to have to be taken very quickly to do so, because it's in a pretty dire straits with oil wells shut in, and the industry kind of on tenterhooks, the economy also in a very fragile state.
In terms of the new authorities in Caracas, or at least the current new authorities, what is their status? As I understand it, the U.S. hasn't formally recognized Delcy Rodríguez yet.
Yeah, it's also, again, we're in a very, very critical moment. So Delcy is effectively the acting president. She got presidential powers from the Supreme Court. There is some confusion now about her status. What happens today will be, again, vital to watch. Many eyes on Venezuela today because a new National Assembly will be sworn in. What that means for her, whether she then is formally sworn in, we don't really know. The situation more or less aligns with the Venezuelan constitution, but there are some uncertainties politically around this. Now, she gave a very conciliatory speech last night, calling for cooperation with the United States, but she also has internal pressures that she needs to be mindful of. There are still stalwarts from the Maduro camp who are suspicious of her, who are certainly suspicious of the United States. She is sort of caught in between, and it's a role she knows well. She has long been a bridge between the private sector and the government, so she has a lot of contacts abroad. She has a lot of contacts in the business community, both inside Venezuela, certainly among the oil companies, and in the creditor community. She's well known, but she is also in a very, very delicate spot. And today will be a real test of how of how she manages the country going forward, and how deep her ability to stay is, how deep her roots are.
Yes.
Politically. She so far she seems to be consolidating power based on regime's existing foundations.
Yes.
We aren't talking regime change here. We're talking about change in leadership.
Yeah, exactly. So far, at least. Patricia, thank you so much for all of that context, and we'll be watching out for the next few hours and what happens. That's Bloomberg's Patricia Garrett. For more on President Trump's oil revival plan in Venezuela, Bloomberg's Mitchell Furman joins us now. So, Mitchell, the president sees U.S. oil companies spending tens of billions in Venezuela. How ready are they to do so, given that some of them are already owed money by Venezuela?
Good morning. Yeah, Chevron is best positioned to spend that money initially. How much is unclear. So far, Chevron has told us that they are primarily concerned with the safety and well-being of their people in Venezuela, where they have been operating for many years and recently under special U.S. license to operate. And they've been able to keep shipping oil out of the country uninterrupted, even as the U.S. Enforces a partial maritime blockade on oil shipments on the sanctioned country. Other companies such as ExxonMobil, ConocoPhillips, which have previously operated in Venezuela and had their assets nationalized in the early 2000s, have been mum about plans to return to Venezuela, but they do have experience, and we'll be watching for what they have to say in the coming days. ConocoPhillips did say this weekend that it is premature to assess any future business activities there.
Yeah, I mean, it's risky, right? You don't know about stability. There's not even any clarity about who actually leads the country going forward. At the moment, it's Delcy Rodríguez. Would they go back in with a Delcy Rodríguez-led government, which wouldn't mean regime change?
You know, big oil companies think in terms of decades, not political cycles, and there will need to be clarity on the fiscal rules and the terms in order for companies to really park their dollars in the country. Oil prices are around $60 right now, and the market is likely heading for an oversupply. So, you know, that is not the windfall that they had seen in recent years, for example, to be able to spend extra money. So, you know, they will need clarity policy-wise from Venezuela before they really spend a significant amount of money.
Yeah, it's all going to take time. Mitchell, thank you so much. That is Mitchell Furman there for us. We appreciate it. Now moving to stocks. Tim Craighead of Bloomberg Intelligence joins us now for 50 companies to watch in 2026. Okay, go, Tim.
Exactly, all 50 of them.
Top 5.
Let me give you a brief background on this. These are part of our broader list of high conviction focus ideas, where we have a strong fundamental view. We think it's out of consensus, and there's catalysts ahead. There's roughly 120 of these that you can find at BI Focus on the terminal. These 50 all have significant catalysts or triggers coming up into 2026. And you know, you can see here some of the big buckets that I would put these into. AI is certainly something you have to look at. It's not the big LLMs, it's the secondary players, the supporting actors. Think something like Constellation Energy, which is helping create data centers with their renewable energy. Or some of the semiconductor companies that support NVIDIA. TSMC, for example, is a case in point. There's a lot of new product innovation here. Think in the consumer space, names that you know, but have important new products like Nike, or think Brinker, who, you know, put it into parlance, it's Chili, the restaurant company. Revitalized stores, new menus we think are going to be driving better growth. You've also got Deckers, which put that into retail parlance, it's Uggs and it's Hoka in the shoes, with new product lines. So it's a host of ideas like this with good stories, interesting out of consensus views, and catalysts ahead.
Yeah, absolutely. And the consumer space is going to be so interesting to watch this year. Tim, just on the AI story, I mean, are we going to see any gains for the loved AI companies, or might we even see some declines, even as we see, as you say, those secondary companies gain?
Well, it's interesting, Vonnie. On that front, you know, we do think that the AI theme is going to continue. There is a lot of question, is there a bubble? But we think that fundamentally the spending is still supported. We just published right before Christmas an important cross-sector C-suite survey. So it goes across all industries, not just technology, to look at how AI is being implemented. And it is picking up steam. Companies across sectors are looking to drive revenue, drive efficiency, and
Yes.
the biggest constraint right now is capacity, which means you need more of this.
Tim, fascinating. You are Chief Research Officer there for Bloomberg Intelligence, and it's a great read. 50 focus ideas to watch for 2026. Bloomberg's Tim Craighead. Coming up, we'll get you set up for your trading week, the first of the year, with the jobs report and lots of Fed speak on deck. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead this week. A huge week. CES kicking off in Las Vegas on Tuesday with keynote speeches from AMD's Lisa Su, NVIDIA's Jensen Huang, and many more. New Year's Fed speak coming up from Richmond Fed President Tom Barkin on Tuesday and Friday. And wrapping up the week, of course, with the jobs report, fresh jobs data, the non-farm payrolls report on Friday. Let's take a look at these markets, because we are heading into a day where lots of questions are going to be asked, geopolitical questions and many more. We did have a great session in Asia, AI enthusiasm rekindling. Futures pointed higher, the 10-year yield a little bit higher than it was last week. Crude gains and losses there. Let's take a look at the metals. Gold continues to rally on those geopolitical concerns, as does the dollar. That's it for Bloomberg Brief.